All right, get ready, because today we are diving deep into December 6th, 2024.
Ooh,
A day the financial world kind of felt like strapping in and going on a wild roller coaster ride.
buckle up.
Yeah, seriously.
Fasten your seatbelts.
From crazy stock market surges to, everyone's favorite, Bitcoin's crazy up and down, up and down.
Always a wild ride with Bitcoin.
Always. We've got reports on everything, and by the end of this deep dive, we're going to see what it all means for you.
Absolutely. Let's decode it all.
So let's kick things off with probably the biggest story of the day. Jobs, jobs, jobs.
Yeah, huge jobs report.
The U.S. economy added a massive 227,000 jobs in November,
Wow.
which, honestly, way more than anyone was predicting. But here's where it gets kind of interesting.
Okay, I'm intrigued.
The unemployment rate also went up a little bit, just a smidge. So help me understand that.
Yeah, right. You think all those jobs, unemployment should be going down.
Right, exactly.
But actually points to a pretty healthy thing happening.
Okay.
More people are entering the workforce.
Oh, interesting.
They're feeling confident, ready to look for new opportunities, better jobs.
Yeah.
So economists call this the labor force participation rate.
Right.
And when that's going up, it's usually a good sign.
Got it.
It means the economy is doing well, growing.
So more people wanting jobs is a good thing.
Exactly. And you know what? This actually gives the Federal Reserve a little breathing room.
Oh, wait.
The strong labor market, it might make them, think a little harder about those interest rate cuts everyone's been talking about.
Speaking of the Fed and those rate cuts,
Yeah.
the probability of a cut at their December 18th meeting, it jumped way up to 88%.
Wow. They're really betting on it.
Big time. People putting their money where their mouth is.
So what does all this mean? Why is a rate cut such a big deal?
Yeah, break it down for us.
So a rate cut, think of it like a powerful tool for the economy. It makes borrowing money cheaper, right? So suddenly businesses, they want to invest, they want to grow, they want to expand. Consumers, well, they're more likely to spend because, hey, loans are cheaper.
Right, makes sense.
It can really jumpstart the economy, get things moving.
Yeah, but I'm guessing there's a downside too.
It's always a catch, right?
Right.
The Fed, they got to be careful. If they cut rates too much too fast, well, it can lead to inflation, prices start going up, and nobody wants that.
Right. Nobody wants that.
So they're walking this tightrope, trying to find that perfect balance.
That sweet spot.
Exactly. Not too hot, not too cold, just right. Like Goldilocks.
I like that analogy, the Goldilocks economy.
Yeah, got to get it just right.
So these rate cuts, they can have a huge impact on everyday decisions, right? Like
Right.
if you're thinking about buying a house
Absolutely.
or starting a business,
Huge.
imagine what cheaper loans could do for you.
It could really change the game.
All right, let's shift gears a bit, zoom in on some specific companies. Salesforce, CRM, their stock, it surged 11% after they absolutely crushed their revenue targets.
They killed it.
What's fueling that success?
So Salesforce, they're really riding this wave of personalization, but doing it on a massive scale.
Right.
They're giving customized solutions to all kinds of businesses, big and small.
Wow.
It's a perfect example of how, understanding what your customers actually want, what they need,
Yeah.
that's how you win.
That's how you get ahead.
You got to stand out.
Right. But not every tech company is having, such a good time. Synopsys, SMPS, their stock took a hit, like a 12.4% drop.
Ooh, that's a rough day.
What happened there?
So they put out their revenue forecast for 2025, and, well, investors weren't happy.
Not what they wanted to hear.
Not at all. And a big reason for that, those U.S. export restrictions on China, remember we talked about global events?
Yeah.
Well, Synopsys, they're in the semiconductor industry, and those restrictions, they're causing a lot of uncertainty.
So it's like a real-world example of how global politics
Direct impact.
directly impacts your investment.
Absolutely. It's all connected.
All right, let's end on a high note, talk about the rock star of the day, Marvell Technology, MRVL. Their stock, get this, skyrocketed, 23.2%.
That's incredible. What's their secret?
Yeah, what are they doing right?
They're all in on the data center and 5G network boom.
Smart.
Their products are in high demand, and they seem to be, really well positioned to keep winning in these markets.
Yeah, that makes sense. Okay, time to talk about everyone's favorite volatile asset, Bitcoin.
Ooh, Bitcoin, always a roller coaster.
It really is. It had quite the day, briefly breaking that $100,000 mark,
Yeah.
then falling back down to around $93,000.
Classic Bitcoin, up and down in a flash.
So what was driving all that crazy movement?
It's that Bitcoin volatility we all know, and maybe love, maybe hate.
Right.
The initial surge, I think it was a mix of market optimism, maybe some fear of missing out, that FOMO feeling.
Right, got to get in on the action.
Exactly. But then, as it usually happens, people who got in early, they start cashing in, taking profits, and, well, the price drops.
Classic.
With Bitcoin, timing is everything.
It really is. And it's not just about, the market sentiment either, right?
Right.
It's those global events, those export restrictions that can send ripples through the crypto market too.
Oh, for sure.
So what does all this volatility tell us about the future of Bitcoin?
Well, it shows us that Bitcoin, it's still a very speculative asset.
Right.
It's driven by perception, external factors.
Okay.
It could become mainstream. Absolutely. It has that potential.
Yeah,
But it's got a long way to go.
it's a long road ahead. All right, let's broaden our view a little. Look at the global markets.
Yeah, zoom out.
Over in Asia, it was a mixed bag. Japan's Topix index, it was up a bit.
Okay.
But Hong Kong's Hang Seng index, that one dipped.
Interesting.
What do you make of these differences?
These variations, they usually reflect what's going on in each region.
Yeah.
Japan's economy, it's been showing some positive signs lately, and that's making investors, optimistic.
Yeah.
But Hong Kong, they're dealing with challenges like those U.S.-China trade tensions, and that's weighing on investor sentiment there.
Makes sense. It's amazing how those global dynamics play out so differently.
Like, it's all connected, but in complex ways.
Okay, last stop on our deep dive. Let's check the oil market.
All right, what's the latest?
We saw a little dip in prices. What's the story there?
So that dip, it's probably related to OPEC plus deciding to hold back on those oil output increases they were planning.
Oh, interesting.
It seems like they're worried about global demand weakening, which could be, a sign of bigger economic problems coming up.
So it's that whole supply and demand thing, right? They don't want
Yeah.
to flood the market if people aren't buying.
Exactly. Got to strike that balance.
All right, so December 6th, 2024, a day packed with information, a lot to unpack. We saw strong job growth, all that talk about rate cuts.
Yeah, Fed's got a big decision coming up.
Big decision. Tech companies, some winning, some losing.
Winners and losers, always.
Bitcoin, well, Bitcoin being Bitcoin.
Never a dull moment.
And some mixed signals from the global markets. So if we had to sum it all up, what's the key takeaway from all this?
In a world where things are constantly changing, uncertainty around every corner, staying informed is more important than ever.
Couldn't agree more.
You got to pay attention to the economic data, how companies are performing, what's happening globally.
It's all connected.
It all ties together.
So keep your eyes open, keep your ears to the ground. What surprised you most about today's deep dive into December 6th, 2024? Hit us up on social media. Let's keep this conversation going.
Let's chat.
Until next time.
See you then.